Welcome everyone, and it's great to see so many of you here during Financial Inclusion Week. We're bringing a session to you today from the University of Cambridge SupTech Lab and Digital Transformation Solutions that's going to specifically focus on SupTech, meaning supervisory technology, and how that relates to financial inclusion, financial health, and many of the other topics we're talking about throughout the week. So in today's session, we'll not so much talk about the financial health indicators or the latest studies in that space, as I know many of our amazing partners and other organizations leading sessions this week will really dive into the details there. But instead, we are going to talk about how can financial authorities, whether that's central bank, capital markets, securities, insurance regulators, leverage supervisory technology, focus on digital transformations and data strategies to really impact and accelerate impact in their regions and countries. So if you see my slide deck here today, my name is Ellie Aresh, and I'll be joined by two other colleagues. Here we go. I'm leading partnerships at Digital Transformation Solutions, and I'm the lead for ecosystem acceleration at the University of Cambridge SupTech Lab. And I'll be joined by my colleague Teresa Oino, who's the Assistant Manager of Policy and Strategy at the Insurance Regulatory Authority of Kenya, and Emmanuel Kipi, who's the Solution Architect for FinTech and Innovation at the Bank of Ghana. Both of them are members of the Innovation Leaders Residency at the University of Cambridge SupTech Lab, where they're really ambassadors for supervisory technology and working on their own exciting projects to accelerate the digital transformation of financial supervision within their agencies. Both come from very different contexts, different type of financial authorities, different type of sectors they're supervising. So it's going to be really interesting to hear how both of them from very different perspectives are leveraging SupTech to advance financial inclusion. Before we get into the discussion with both of them, I wanted to share with you a little bit of more information based on the latest data that the Cambridge SupTech Lab has from the State of SupTech Report 2024. That report is based on the largest global data sets out there on supervisory technology. As for 2024 alone, we drew on input from 139 financial authorities across 100 countries and 23 solution providers. And over the past 3 years, we've really built up this data set, drawing on 228 financial authorities' inputs overall. So that really helps us understand how supervisors are moving from early pilots to scalable deployment. And of course, importantly today, where financial inclusion fits in that journey. On this slide, you'll see the growth of live SupTech applications around the world. Back in 2022, when we started this research, only about 54 authorities had at least one live application. But by 2024, so just 2 years later, that number has jumped to 171 authorities across 101 countries, which means that SupTech is really moving from small pilots to widespread deployment. And what that means for financial inclusion is that many more supervisors now have practical tools in place to monitor access, to protect consumers, and to, of course, close gaps in the market. We have a lot of data available, so I'd encourage you to read our full State of SupTech report that I'll share in this chat in a second. But let's dive into some quick specifics here to really frame the conversation. Here you see that SupTech is being used across a wide range of supervisory areas. The most common uses are prudential supervision and anti-money laundering. But importantly, financial inclusion is now, of course, also firmly on that list. Specifically, about 33% of authorities report that they're already using SupTech for financial inclusion or financial health monitoring. That means a third of all supervisors who are leveraging SupTech are using it for financial inclusion, meaning financial inclusion is not an afterthought for them, but it's really becoming a core supervisor priority, and their digital transformation strategy is behind that. An additional third says that it's desired, but not yet planned. Often these inclusion-focused tools go hand in hand also with consumer protection or payments oversight, so making sure that the financial system is not only stable, but also fair and accessible. I think the next slide here is going to be of the most interest to the group here, as it dives into okay, so what actually are financial inclusion use cases that are advanced through SupTech? And it shows where the gaps are, what supervisors say they need in order to strengthen their financial inclusion efforts. What's really striking here is what supervisors currently have in place, what you see on the right blue, versus what they want, what you see in the gray. So most authorities today still don't have the right data tools, but when asked what they prioritize, over half of them are pointing to inclusion-related use cases. We see several priorities here. The first one is geographical trends, as about 40% of supervisors say they want to track rural and urban disparities or map where access points are missing. So they're doing that already through SupTech tools. That type of intervention is crucial for spotting underserved areas, for example, regions with very few branches or agents or insurance providers. Another area is that 37% of supervisors have tools to collect and analyze data by gender. Right now, only a small fraction is actually doing it, as we're seeing here, but it's really vital for understanding differences in how genders access and use financial services. And we also see that roughly around 30% of authorities are prioritizing ways to monitor financial literacy initiatives and consumer awareness, as this helps supervisors evaluate if awareness campaigns are reaching the right groups and whether vulnerable consumers actually understand the products available to them. Beyond those three areas I just mentioned, you'll also see that some authorities are exploring tools to monitor financial health indicators such as debt or resilience to shocks. And others are looking at ways to integrate alternative data sources, whether that's mobile transaction data, to build a clearer picture of usage patterns among low-income and rural populations. The takeaway here really is that supervisors recognize that traditional reporting only tells part of the story, right? So tech tools that they can add granularity and real-time visibility, whether that's across gender, geography, or consumer awareness. And that's really what's needed to close today's increasing gaps in the manner. I'll share a last slide here before we get into the discussion, as we're also measuring. Of course, all of this is great. It's making the life of supervisors easier. It's advancing things in every economy. But are we actually sure it's doing that, right? We're also measuring if those SupTech tools are actually effective. And fortunately, the good news here is that where SupTech has been deployed, it is working. 68% of supervisors say that their SupTech applications are very effective, and another 25% say that they're moderately effective. So that's more than 9-10 authorities that are really seeing the benefits from it. The benefits go beyond efficiency. Many report better risk detection, more reliable data, and faster decision making. But perhaps the most relevant for this group here, of course, is the financial inclusion outcomes, as supervisors highlight that SupTech has led to increased awareness among consumers and even an increase in the number of financial consumers reached and protected. We have a lot more data where this stems from. We also have a big breakdown between advanced and emerging markets and developing economies. And all of that you'll be able to review in our State of SupTech report, and with lots more detail, a lot more examples added there. But for now, I think, of course, it's the most interesting to add a little bit of flavor to that discussion by really hearing what are regulators doing? What does the data tell us? What's actually happening? What type of tools are being deployed? So I'll first pass it over to my colleague Emmanuel here from the Bank of Ghana, and as well as to Teresa from the Insurance Regulatory Authority of Kenya. First, a very quick question to reflect, as you'll see that the State of SupTech Report highlights that supervisory technology is increasingly being used to close the gap of financial inclusion. So from your perspective, why is better data so central to designing effective supervisory intervention for inclusion? Emmanuel, maybe first over to you.
Yeah, so to answer your question, which is a very interesting question, I would ask you to forgive me because my voice is a little croaky. I got down with a bug when I traveled a bit, but I hope you can hear me a little clearly at least.
Yes, we can.
Great. Now, why is data so essential? I think the most important thing is that data actually reveals or gives us clarity on what is being excluded. Okay, who is being excluded and why is this segment being excluded? And depending on how robust or rich the data is, or the data sets being used, the more meaningful the information we're able to gather from that. So to answer your question, data is very integral because the data sets which are used in trying to understand or measure the level of financial inclusion that might be challenging a lot of our ecosystem has to do with the level of granular data. Traditional reporting are very typically picked up transaction volumes and values, and sometimes break it down to some very disaggregated data by gender, by regions, by income level, by product type, by frequency. Now, the ability to use SupTech tools to break down more granular data sets enables us as a regulator to understand who is actually being excluded financially and why they are being excluded. And this is a very key question to help understand how you bridge that gap when it comes to financial inclusion. Let me allow my colleague Teresa to speak also from this.
Thank you so much, Emmanuel. Teresa, over to you. Why do you think better data is so central to designing effective supervisory interventions for financial inclusion?
Just to add on what my colleague has said, better data helps regulators and policymakers to understand the pain points and also to help in monitoring the interventions. When they monitor, they find out whether the interventions they have carried out are working, and also helps them to discover new risks and all vulnerabilities. In all this process, they help now to build trust in the financial system and to have transparency. And these are important in terms of enhancing inclusion, especially where we find that trust is an issue, especially for a case like insurance.
Thank you so much, Teresa, for sharing that. I think I dropped off for a second here, but I'm right back. And thank you both for framing the discussion here. As you both said, also financial authorities are, of course, limited in the amount of resources that they have available. So the better data leads to being able to make more targeted interventions and leads to better decision-making and prioritization of actually spending resources where we know they didn't work and they actually lead to better outcomes for consumers. Let's now turn over to hearing about some really concrete examples. Emmanuel, the Bank of Ghana, you're piloting an AI-powered complaint platform to improve complaint handling. So what have you learned about how such tools can empower consumers and build trust in financial services? And shed a little bit of more light for our audience here on the AI-powered complaint platform that you're leading.
Thank you for the question, Nia. So I'd like to just state here that the Bank of Ghana has been piloting for a while this consumer protection chatbot complaints management tool. And in trying to put together, bring a best effort onto the public, we have designed the AI-powered chatbot. We call her Akushika. And we've been piloting it with smaller segments. Now, one important thing is we have brought out this practical application to allow consumers to experience a nearness to be able to release or transmit their complaints. Now, they don't always have to walk to a place, pick a phone call somebody, and be on the line for a long time. The chatbot, the AI-powered chatbot, is created a level of semblance where it's like you're conversing with a person. Now, the first thing was for the Bank of Ghana to ensure the clean and sanitized nature of whatever information, because it's moved from just a complaint handling tool to also become an educational tool and awareness and educational tool where people can receive authentic information from the regulator, from the central bank, through the chatbot, and they can trust it. That is one very important pillar we look at creating that level of trust so that the level of information they can attain or they can retrieve from this AI tool is trustworthy and is clear and understandable. That's why we've been piloting it for a while to fine tune it and then get that level of clarity. Secondly, the chatbot is providing more than just a complaint channel. It's an educational and engagement tool, like I mentioned. It has the effect of improving consumer awareness. We use it as a channel to improve consumer awareness. And then we also move it as a form of being proactive. Data generated from this chatbot. So the chatbot is gathering as much data from inquiries and complaints that have been submitted. And that gives the regulator an opportunity and an edge to be a little more proactive. So this becomes a supervisory tool. We're gathering this data, and then we're able to filter through and pick possible areas of alarm in the ecosystem. So for example, if a particular region is people are beginning to drop in complaints about, let's say, unlicensed savings collections and stuff like that, it gives the bank an idea of that demographic and the challenges that may be faced there. For, some Ponzi scheme has decided that, oh, this is a bit of a remote area, this is a bit of a naive community. Let me just put in this thing in place and exploit them of their funds. But the chatbot provides us with that level of data that gives us the ability to be proactive and to nip this kind of challenges in the bud before they become major escalations. And that is a main key in enhancing supervision. Finally, one of the biggest takeaways is trust. Trust is built through responsiveness and transparency. We are able to use this tool as a means of developing trust from the ecosystem. Once they know that when I reach out to this platform, I'm able to receive a feedback. So whatever I sent out there was processed, was looked at, and some feedback has been sent, they feel a level of trust. And trust is one of the things, like I mentioned earlier, that drives financial inclusion. If you do not trust the system to either protect you or provide for you relevant information or direction, you would not be comfortable enough to what? Be inclusive in that. So what I mentioned earlier is that we're using the SupTech tools not just for one purpose as complaints handling, but we're also using it as a supervisory tool, which is able to give us proactive readings of the ecosystem and also provide a level of education and awareness to the ecosystem, participants in the ecosystem, and also provide a level of trust where consumers at any remote level can reach out to this platform and can receive an authentic, straightforward guidance. I don't know if that speaks to your question earlier.
Definitely. Thank you, Emmanuel. And of course, congratulations to the Bank of Ghana team for that really comprehensive effort. And I love that you outlined it's not just one use case. Of course, consumers will have their complaints resolved in a more faster or easier way. But that leads also to financial education and, of course, importantly, more trust in the system and more foresight for Bank of Ghana overall in spotting issues and planning accordingly. Let's now move to Teresa and talk about a very different use case and different technology that you're leveraging and aiming to leverage at IRI in Kenya, as you've done research that showed stark geographic disparities in the private insurance uptake across the country. So I wanted to ask you, how can geospatial analysis help regulators and policymakers design more targeted interventions to expand coverage? And how can financial authorities embed this kind of spatial analytics into ongoing supervisory systems as living tools, living SupTech tools? Teresa, over to you, and keen to hear more about your efforts.
Thank you. So in terms of geospatial analysis shows it's the analysis by location, which means we do analysis to show the exclusions, the counties that are most excluded, where the uptake is limited. And we also do analysis to show the barriers to insurance uptake and the intensity or the density or preference in each county. Now, when we analyze like this, we overlay with population characteristics like gender and age, and then you have the barriers it's easy to know who is excluded and where are they excluded. So we are able to develop interventions that are targeted to the people, that speak to the needs of the people. For example, if we see like counties in the northeastern Kenya, you find that they have issues with awareness. We are able to create awareness programs that are targeted to them, and we even use local languages to pass out information about insurance to them. There are some areas, as much as like cultural issues are not widespread, through geospatial analysis, we are able to see in which counties are these issues pronounced. And with this kind of analysis, we are able to integrate cultural norms in our messages, and also to target and even to help develop products or programs, advise insurers to share this information with insurers to help them in coming up with products that speak to the needs of these people.
Thank you so much.
The second part, I didn't get it clearly. Kindly, if you could repeat.
I think you've already covered it, Teresa, really outlining how geospatial analysis doesn't only help you with your supervisory processes, but goes a step beyond that, of allowing you to design programs that really target where it matters the most and work hand in hand with insurance providers to get such programs off the ground. So thank you so much for outlining that. And I've also pasted in the chat here a case study from Bank of Ghana's chatbot that dives a little bit deeper into at least the initiation process and the first layer of the chatbot development, as I saw some questions here in the chat. I know we're covering a lot of ground in a very short amount of time, so I wanted to ask you, Emmanuel, you've also been very passionate about the topic of supervision of digital assets, which is something that you've been more and more exploring and advancing at Bank of Ghana. And we all know that supervising digital assets presents both risks and opportunities for financial inclusion, whether that's ensuring market integrity, but also expanding access to new forms of value transfer. So how do you see SupTech tools and stronger data strategies helping supervisors balance these two sides? So enabling safe innovation while protecting consumers.
Thank you for that question, Elia. You are absolutely right. Digital assets, special assets, represents both opportunities and risk, which is one thing we are getting exposed to. Each day we progress towards providing a framework or regulation for virtual assets in our ecosystem. The truth is, in as much as a regulator, we don't want to stifle innovation, we have a very vibrant population who are doing a lot of active things on cross-border remittances, investment accesses, and other interesting cool stuff in cryptocurrencies, in blockchain, and these very innovative emerging technologies. However, there needs to be a balance between innovation and safety. So the central bank, who is the custodian of the financial space, has to really draw out that balance. We have to also understand that there have to be stronger strategies, and this has to be built on data. In the area of virtual assets, we are moving completely away from traditional finance to finance that is more tailored around data. And you cannot use traditional forms of supervision to go around to find out if every people are doing the right thing, if consumers are being protected, and if money laundering and terrorist financing is being dealt with, and people are not using this encrypted form of payments or transactions to do illegal activities. So at this point, you have to now boil down to the data. You have to look at wallets that are being used. You have to look at the various forms of intermediaries that are working between these platforms. Now, the better the data you are able to gather, the clearer and the safer it is for the regulator to control the ecosystem. Now, we have, I think the first step the central bank has started with is putting together a legal framework, which we have drafted, and it's currently going through the legislature. So the parliament is reviewing that, and it comes out to become an act. Now, as that works, we are parallelly working with various directives, licensing procedures, sandbox procedures, in which we can be able to manage this ecosystem. Because the moment you give a green light and say, hey, we are here doing approving or licensing or regulating cryptocurrencies, if we don't have the right structures in place, we are going to have a mess in our hands. And that's what the central bank, under the good leadership of management, are being innovative, but also trying to make sure we have the right safety gaps to govern this. And that is where we need the right SupTech tools to actually control what we do. Finally, the broader lesson is that data and technology are enablers of trust. I mentioned that earlier when we talked about the use of AI. When it comes to the space of virtual and digital assets, the more data you're able to gather gives you that level of confidence and trust. And we want to be able to respond swiftly and act efficiently to issues that may arise with wallets and exchanges within our jurisdiction. And that is based on how efficient we're able to put together or gather data from this. We're working in close partnership with some experts, Chainalysis, and we also have opened a sandbox regime where we allow API integration so that any entity who's coming with something innovative in virtual assets, he gets through an API integration process with us, and everything they do, we are able to have a clear visibility of whatever happens on their wallets and whatever happens on those exchanges. It's a gradual step, but we are working on that. And I would just say, I would also want to quickly mention this, that it's easy for us to mention that, hey, we are putting up SupTech tools, but you need to understand how you put together a SupTech tool. It's from my experience, I'll say this, I'll use this platform to share this with your listeners. It's very easy to pick up a vendor and say, oh, I'm working with this vendor. And what the vendor will do is he will sell to you his idea for profitability. But then the good thing we've experienced in time past is engagement with the SupTech Lab, where they give you the opportunity to delve into your actual requirements, understand your pain points, and based on that, when you're engaging vendors, because they are the experts in those platforms, you know exactly what your requirements are, you know what kind of loopholes you want to fill, you know what value you want to create from the reports they submit to you. And that is very key. So I would leave on that note.
Thank you so much, Emmanuel. And I've been informed we're already at time for this session. There was many more topics we wanted to dive into, but I wanted to share with the audience here, we are organizing SupTech Week in December, where we'll have many more sessions, and you'll be able to hear from both Teresa and Emmanuel in more depth there. We'll make sure to organize opportunities, as we just scratched the surface here, talking about chatbots for consumer complaint, talking about geospatial analysis, talking about digital asset supervision, and a lot of more data and case studies can also be explored in the State of SupTech report that I shared in the chat here as well. So just thank you so much, Emmanuel and Teresa, for joining us, for sharing a little bit about the many efforts that you have going on at Bank of Ghana and IRA in Kenya. And apologies for not being able to take more questions here from the audience or from a panel, but we'll definitely reconnect soon. And everyone, always please feel free to reach out to the University of Cambridge SupTech Lab at any point with input, with questions, and we'll direct you to the right resources. So thank you, everyone, and looking forward to many more exciting sessions here at Financial Inclusion Week.